Well, let's look at the property market. It's remained subdued over the weekend with clearance rates staying below 50% across the country. Joining me now is our business reporter, Edward Boyd. Ed, about a third of properties scheduled for auction were withdrawn from sale. This is showing that buyer demand is simply not as strong as it was even just a few months ago.
Really since before the Reserve Bank started to lift interest rates. So that was only a couple of months ago now. And we know the cash rate is now at 1.35%. That's starting to push down demand from buyers. They simply can't borrow as much money as they could before. Also, we are in the middle of winter, and winter is a typically slower point for the property market. But we're seeing a lot more properties being withdrawn from sale, quite a few properties also passing in at auction, and then also a lot of private treaty sales. So there are buyers that are making offers ahead of the auction, and the sellers are actually accepting those. They're not wanting to risk going to auction. So all those factors together have really pushed down auction clearance rates over the last couple of weeks across Australia. We've got a chart here we can show you. The national rate's 49%. Sydney, though, is around 45%. Melbourne's about 56%. And then if you look there at Brisbane, 32% clearance rate. That's on about 80 properties sold in Brisbane. So not a huge amount of stock on the market at the moment in Brisbane, but still clearance rates below 50%. We haven't seen this. Well, we saw it last week and the week before, but apart from that, we haven't seen it for a couple of years, Laura.
Wow, okay, yeah, it's certainly subdued, you might say. Ed, let's look at the week ahead. A busy week of economic news headlined by US inflation numbers. They're being released on Thursday.
US inflation Thursday, this is expectation is it's going to be still at 40-year highs of around that 9% for the 12 months. Also on Thursday, we get Australia's unemployment figures, and the expectation is 25,000 jobs will be created during the month of June, and that'd bring unemployment down to 3.8%, so getting closer and closer to full employment. Then on Wednesday, we have the Reserve Bank of New Zealand's cash rate decision, and the cash rate in New Zealand's already at 2%. It's expected to go up to 2.5%. And then to cap off the whole week on Friday, it's China's GDP numbers, and we'll see the impact of the lockdowns China is having on its people, which is expected to push economic growth down in China's quarter, down by 2%. So that would be quite interesting to see how those figures play out as well.
It certainly will. Ed, thanks so much.